this is very much, and I know people say this, but this really is work in progress. And so this involves a look at fund governance. And I approached it initially using my background, which was in corporate governance, and just the ideas that flowed from that, plus financial regulation. So um, I'm looking particularly at funds that would qualify as UCITS or alternative investment funds and the regulation there. But I was really interested in the discussions today, and there's a lot of the discussion on stewardship, and it focuses on the relationship between the asset manager and the portfolio company. And then there's a discussion about the impact of different type funds. There's a lot of work looking at stewardship codes, and fantastic work's being done by this. And you heard from Dionysia yesterday, and people like Sean Griffith and Dorothy Lund and Jill Fish, fantastic work on this. But I was looking at it from the fund perspective. So when I see that votes are passed through, and again, these are just a headline from last week, BlackRock offering a vote to retail investors. And that's fantastic. And then there's a bit of questioning, is this actually going to make a difference? So why are they doing it? And different reasons. And Cynthia's presentation was so interesting, but certainly this is one reason. You pass back that responsibility for decisions, to the investors themselves. And so I thought, well, how does that work in the power dynamics? And I worked with directors of boards of companies. So that was my particular insight. So rather than thinking of the fund as just a fund, I'm thinking, well, who makes the decision in the fund? It's the board. And they will often, and the vast majority of them now, will have a fund management company or a ManCo to do a lot of the heavy lifting. So initially, when I looked at this from a governance perspective, I thought this will work. A fund will appoint a ManCo, and then the ManCo will appoint the asset manager, and then the discussions we had earlier this week will work. In practice, of course, that's not how it works. So you have the star asset manager who will set up the funds, who will appoint the boards and the individual board members. And so if you think, people like Neil Woodford, and this was an earlier note from the reports, the man who can't stop making money, of course, until he did stop making money and all the investors lost money. But if you ask, well, why did people get involved in Woodford funds? They got involved in Woodford funds because of him. There was that particular draw. So my question really to look at is, well, what role does the board play in this, and how does governance fit in? And again, there's no need to try and look at this. What this slide demonstrates is that there's a lot of primarily soft law on this, talking about governance of these boards of funds. And a key point is independence. And there's a reference there to independence in terms of, that sort of cognitive issue, independence of mind. Plus, there's a note of, well, what is independent in terms of relationships? And this is familiar to most of us until you actually look at the composition of these boards and you realize that there will be one independent director and everybody else is related to a group or to an asset manager. There is no real independence. And so what you see is it's not a question of avoiding a conflict, it's managing a conflict. And then there's the question, well, what's the board of the investment fund or the ManCo? What are they supposed to do? And I thought this was an interesting, example which was publicized in March, and it involved a listed fund, a really successful listed fund, Scottish Mortgage Investment Trust, listed in the UK. And their board had, and this was unusual, of the 5 directors, 3 of them were academics. So imagine a board full of academics. But one of them, who is an American academic, stepped back really publicly. And that's what he said. He said, my concern is that no one on the board has any professional investment experience. And the board needs people. Now, he had other issues about the term of directors on the board. The chair had been there for 12 years, for example. From a government's perspective, people, what? 12 years? And what role? But the the pushback from the firm was really interesting. So the senior non-independent director, and again, this was a listed company, so it would have fallen within the corporate governance code for listed companies in the UK. And they said that the lack of hands-on experience was deliberate. And look at what they said. We don't want people second guessing the asset manager. We want them to to challenge the investment managers to examine risk exposure. So it's not the sort of the big picture. That's what they said. And so this led me to look at the issue of the peculiarities of fund governance and what translates and what doesn't, and the things that we take for granted. Because remember, a lot of the funds are companies. So the vast majority of these will be investment companies with typical board structures and separate legal personality and fiduciary duties from a company perspective. So what translates? So the first thing to note, and they will all tell you, well, a fund is so different because yes, it is a legal entity, but also it's a financial product. And so do you talk about your shareholders or do you talk about your customers or your investors, and how does that get into your head and make changes? Second thing is that everything is delegated. So if you look at the fund, 99% of them at this stage have a fund manager, which is set up to manage the fund, to do all the sort of liaise with the administrator, the depository, the asset management. So there's that two layers before you get to the asset manager. So everything is designated, and yet it's clear, and we know this, that you can't delegate responsibility. You can delegate authority, but not responsibility. So where does that leave us? And then in terms of the fund itself, you know, the basic fund may have no employees. There may be no executives. So yes, there are employees at the fund manager level, but not at the fund. The board composition I've alluded to already, and this was the strangest thing. So how did you get the job? Well, I was approached by the asset manager, and you know, this is something, or the lawyer to the asset manager. So they come in. Well, when did you come in? Well, the idea of the fund was well developed. You know, we knew what we were doing. We had our audience planned. You know, we had a draft prospectus. That's when we came in. So their ability to influence, plus the conflict of interest, was really a huge thing. And then you look at the role that's expected of them, and that's part of a different subject. But if you look at the extraordinarily ever-expanding regulatory roles, and we talked earlier this morning about the individual accountability regime, which will come down to apply to these people in Ireland, certainly in due course. And then you have the relationship between the fund board, which does nothing but is in theory responsible, delegating work to the ManCo. And typically the ManCo will be part of a broader group, which is the asset manager in there. And what jobs do they do, and how do you second guess what's going on? So it's extraordinarily complicated. And when I talk to the various individuals involved, particularly that last point, well, what's your relationship with the ManCo? Well, we get them to do everything. Okay, so do you see all the delegates? Do you see the asset manager and the presentation? Oh yeah, they come in, you know, periodically. Well, do you ask them tough questions? Well, they've already been asked those questions at the ManCo level. So it's a very peculiar perspective. And this is the idea of the dog, the tail wagging the dog. So when we look at funds, how does that relationship affect? So I'm not going to dwell on this, it was done yesterday so perfectly, but the corporate purpose debate is obviously for company law. It's really important. It's somewhere we've gone from the profit maximization to the, you know, to the British Academy and column there and something plus. So as a corporate governance person, I came into the funds and said, well, how are you thinking of companies in this respect? How are you thinking about culture? Because, and Annette talked about it earlier, but, you know, as a board, you have a responsibility for leadership. So how are you leading in values? And they were going, well, we don't really think about that. So should funds themselves think about these questions? How does it apply in the context that I've just described, where you are there because you have been appointed by the, in reality, by the asset manager? If you don't do a good job, you are not necessarily going to be sacked, but you will not get reappointed, and you most certainly won't get a job around town if you're particularly challenging and difficult. So I know these are issues that we've dealt with in the company law sphere as well, but they're very real. So looking at that prism, what is the purpose of a fund? And so if you look at the broad purpose, it's a really important social rationale, the idea of pooling resources to achieve returns through diversification, low cost. This allows money to flow into the real economy. It allows everybody invest. But if you talk to them themselves and you say, well, what's your purpose? They say, well, it's to invest in accordance with our constitution, in accordance with the prospectus that's already been drafted, and to try and minimize risk. There's no issue of that sort of broader role there. Looking at some of the surveys, asking directors, asking investors what they want, and they say all those things that I've just mentioned about low cost. And then the last of them is to have regard. And so my question is, well, how do you do that if investors want it? And here, and I know we've talked about it already, but there's a lot of work on fiduciary duties. And the fiduciary duties in this legislation is very much emphasizing investors in terms of financial returns and the best interest of the fund, the best interests of the investors. It's not broader. The UK Stewardship Code, even if you look at it in terms of asset owners, it talks about long-term value leading to sustainable benefits. So it's not the purpose itself. That broader purpose has to follow. The FCA have talked about, and I think they were very honest in 2020, and they said when we talk about purpose, what we really mean is not looking to see whether a firm can demonstrate a broader social purpose, such as fixing climate change or regenerating areas, but they say there's a social value inherent with the business providing financial service as well. And you could say that for a bank as well. You could say it in any context. But now there's so many issues. So in Ireland, you know, after the Liz Truss debacle, and there was a whole new review of illiquid open-end funds and what should be done about them in terms of property investments. On the bottom, the Irish Department has said, look, property funds have to consider that housing is a really important social issue in Dublin, and you are going to have to indicate how you are supporting our government policy objectives. So that's much broader. If you talk to the fund directors, and I did some research on this, and this is the work I'm looking at, 76% of them agreed that the purpose of the fund was just to do what they were supposed to do, something that they had very little input into. And only 13% of them thought they had any sort of flexibility. So the column there and bit and that border doesn't come into it. So the conclusion from this is it is very hard, and this is the challenge. So, you know, what I am trying to see is what can these directors do? What can they do to make a difference in that border scheme? So think about it, delegation. They delegate a lot, but they still have responsibility, and now they're going to have accountability. The supervisors, so the Central Bank in Ireland, said that there was an absolute lack of effective challenge. They said, we've supervised, we've looked at it. You're not asking the right questions. You're not robust enough. You're not evidencing it. There's the conflict of interests I've mentioned. And when you talk to them, what they will say is they really struggle with this ability to influence. So if you look at investment, or you look at voting coming down the track, there's a really limited ability to do anything important. And so I'm struggling with the idea of what they should do or what they can do in order to demonstrate that cultural leadership that we've been talking about. So that's where the question mark comes. So it's a question of what can be done, and I'm really looking forward to you giving me all the difficult answers to that question. Thank you.